And joining us for a further look on what's playing itself out in that market scene is Cremen from Adviceworx. Caroline, a pleasure. Good afternoon to you.
Hi, nice to see you again.
Right, guys, the first time we're in midday trade and are seeing green screens this week, literally on the local bourse. It's been quite a tough one. Keen to get your thoughts on what's driving markets this afternoon.
Well, I think we really didn't have a very good week last week. There was a lot of volatility, a little bit of uncertainty, and that seems to have died down. There's always a bit of a push towards the end of a month, not usually a non-quarter month, but that has certainly happened. But I think the market has made its peace with the fact that we're not going to get federal interest rate decreases in March, and so people are calming down a little bit. The nerves have settled. I think if we can attribute to anything, nerves are settling.
And should the inflation print we're expecting later do anything to those nerves?
Look, I think it's pretty clear that, and you saw two Fed spokesmen or Fed heads, regional Fed heads speak recently, and certainly March is out of the question. May is up for grabs, but I think the market is still kind of anticipating a decrease there. So potential wobbles if we get a worse than expected inflation imprint. I think it may probably disappoint the market. You don't often see Fed heads coming out this close to an announcement and being this kind of bearish. So it almost feels as if they're missing the potential impact that's coming out of this. But I could be wrong. But it's you learn to listen to people and kind of hear the tone of what they're saying.
Absolutely. It is a rather busy day on the JSE. I think a sense has been going off all morning, which of course is welcomed by most of us. Maybe we can start off by unpacking Pepco and the information about the selling of the building company. Of course, it looks like it's a 1.2 billion rand price tag. I'm wondering if that is good enough for this part of their business.
Look, I can't tell. It's difficult to tell if you're sitting as an outsider when you're looking at an asset that a company really has. Can value. I think just really from an investment point of view, what you really do like to see is you always like to see non-core assets get offloaded for companies to actually focus on what they actually do. And also we like to see cash coming in, especially in our cash pile like this, because we are, you see it in all of our consumer stocks, banking stocks. Consumer is under pressure. So I hope they got a good price, but really what matters to me as an investor is that money's coming in kind of a depressed period for the consumer. So hopefully that's going to be good for Pep.
Where we are seeing no surprises, Caroline, is with Impala Platinum. It just has been one of those periods, a 78% decline in profits. I think at this point we are just possibly welcoming the fact that they haven't announced retrenchments at this point.
I think the key thing is really at this point. And, there's been kind of mixed results, for the commodity producers that really do have some assets in South Africa and also Sub-Saharan Africa, Zimbabwe in particular. So I think just want to focus on at this point, because we're looking at a period and you really got to look at what's happening overseas, and certainly what we need to start to see China start to fire up. And that's not happening. And unfortunately, the longer that there's kind of uncertainties about the Chinese economic recovery, or if China's going to stagflation, there's going to be an overhang on all of these platinum stocks and certainly on all of those commodities. So I don't think this, type of environment for Impala is necessarily going to go away. What I do feel is that it's going to be a kind of a prolonged, almost like a little dampening time, for all producers, and it's the guys who are going to really be able to, consolidate the costs and deal with load shedding and all of these other things. Are the winners. I'm very insecure about Impala. I'll just put it up there.
And of course, a good one, this one is Sunum. They've done super well. Dividend is up, revenue up. It looks like they've had a bumper period, even though they have said that their underwriting margins did come under pressure.
Yeah. So I was really amazed by this because, when I look at Sunshine and I look at a period like this, it is almost directly consumer facing, short term, a lot of it short term, people and consumers are under pressure, these are the types of policies that they let go. And the revenue was up 9%, HEPs were, just blew it out of the park. And what is really interesting is that the gross written premium was up 6%. Now that's really very, very good in the type of economic environment that we're having. So, return on capital, 28%. So, when you look at companies, say, here's not the right period for this company, and then they shoot the lights out, it just goes to quality of management and quality of the book and the structure. So, really, very, very impressive set of results there from Sunum.
Another impressive one is Spur. It looks like, they really have also managed to weather the storm, also consumer facing. But I think what really works for them is that they've got a little bit for everybody.
Exactly. If they've got something for everybody. And again, speaking about both these companies, sometimes Spur, it goes to the strength of some of those mid caps that we've got in South Africa. And when people look at South Africa, some of those mid caps say they're undervalued. They probably are, but you don't know what's going to unlock value. So Spur, HEP's at 15%. They've got a fantastic cash pile. I mean, I didn't actually realize that from past results that they're actually sitting on so much cash. And, again, in a depressed environment, this is really what you want to see. I mean, it's nearly 300 million. So yeah, but what they do say, and I think this is important, that they are seeing pressure, particularly in that lower and middle income area. This is also where the banks are saying the same thing. The retailers are saying the same thing. But like I said, a little bit for everybody. Probably, I think they are also. I would think that they're actually being helped by those upper market restaurants that they're now getting into. But what is really interesting to me is they plan to open 41 new restaurants. So this is a management that's really about their franchise and their brand. So it's a little bit of ray of sunshine in South Africa right now.
Let's also touch on AB InBev. We know they had that, we'll call it a marketing slip-up, Caroline, but it seems that they've fared pretty well during this period. Could have been better, obviously, but here we are on the other side, and they've even upped their dividend.
Yeah, so speaking about the little marketing slip-up was, if you had a look at the Super Bowl, which is, when the one part of the American year when you kind of sell more beer than pretty much anywhere else, is that they were still actually the second best-selling beer brand, despite the fact that they slipped, So, one tends to underestimate or overestimate, these types of slip-ups. Certainly it was, it's not the greatest thing to happen to them, but they've still got a very functional franchise, very functional brands. It's just a question of, I don't know if you can rescue the brands that were part of the slip up, but they've certainly got a lot of other brands that actually can take their place. In fact, I think their brand in the US was actually second or third. It was right up there. So that, where you kill one brand, you kind of bring another one online. That said, I've never been a fan of AB InBev simply because of the debt level. So it was nice to see that that's kind of coming under control. But I thought the results were very, very tepid, and they've been tepid for a while. I mean, there's not much there. The revenue was down, the volumes were down, and I don't think they can only be attributed to the slip up. They seem to be losing focus a bit, or they're kind of at a disadvantage relative to brands that are, these kind of designer brands, and where the millennials are kind of going to. And of course, you're also seeing millennials drinking less beer and less alcohol generally. So I think there needs, just for me to start to get comfortable. I mean, InBev, I think I want to come, I don't know, a little bit of a rebranding, a rethink, of how you approach a company like this in the world of millennials, because as they mistakenly did with Bud, is that you do need to find new customers, and I don't see that.
With that said, Caroline, we don't have much time left, but I'm keen to get to your stock pick before I let you go.
Okay, so I'm going to go cash, and the reason why I'm going cash is simply because we are in a bit of a strange place in the market. We had a bit of a sell-off of the market, and the market just picked up again, and we are coming through to a period of a couple of inflation figures out there, and I think the market is increasingly starting to think, well, if we're not going to have a rate cut in March, will we have one in May, and will it finally end up being in the second half, as the Fed has indicated. So I think there is room after this month end for people to really start to get a bit nervous ahead of the Fed meeting on the 20th of March. And I really anticipate there's going to be a bit of volatility there. So just hold on to your cash. I think the opportunities will come.
Fantastic, Caroline. A pleasure speaking to you today. Thank you so much for your time. That was Caroline Cremen from Adviceworx.